Inflation.
Prices continue just to skyrocket.
The world is seeing unprecedented nature of inflation and cost of living crisis that has made life of ordinary people miserable. Many people have gone below the poverty line and many have defaulted on their debts. Prices of rent, grocery, essential commodities have risen, and they keep on rising up with no end in sight. Inflation rates increased in various regions, including Europe, Brazil, Turkey, Pakistan, Nigeria and the United States. The Eurozone, in particular, experienced record-high inflation, with nearly half of its countries having double-digit inflation rates. Central banks worldwide responded by raising interest rates, but this approach also carried the risk of a global recession as increase in interest rates decreasing business activities. In North Africa and the Middle East, countries like Tunisia and Morocco faced inflation driven by soaring energy prices and food costs. Turkey experienced significant inflation, with prices increase of 47%, and the Turkish lira is also facing a currency crisis. In sub-Saharan Africa, rising food and household product prices contributed to an increase in inflation and resulting in more instability. In North America, the United States saw high inflation rates, with the Consumer Price Index rising to 8.9%, the highest since 1981. The Federal Reserve raised interest rates multiple times, while real wages struggled to keep pace with inflation. President Joe Biden's approval ratings declined amid rising inflation concerns. Canada experienced inflation highs not seen in decades, reaching 7.7% in May. In South America, Brazil's inflation rate peaked at its highest since 2003, while Argentina faced soaring inflation rates, reaching more than 100% 2023. Chile experienced record inflation levels in 2023 due to expansionary policies during the pandemic and withdrawals from pension funds. Europe, including the Netherlands, the UK, Germany, and France, saw inflation rates surge. In the Eurozone, inflation reached 10.7%, prompting the European Central Bank to raise interest rates. Asia faced inflation challenges, with the Philippines and Japan experiencing high inflation rates. The Japanese yen touched a 32-year low against the US dollar. Oceania is also encountering rising inflation, prompting discussions of interest rate increases to combat inflationary pressures. Notably, significant price hikes were observed in various categories, with the most notable increases occurring in gasoline, shelter, and food. Food prices rose by 10% year-over-year, shelter costs increased by 5 to 6%, and energy prices skyrocketed by 41%. These factors collectively contribute to the current economic challenges faced by many people, especially middle class. In this video, you will know why there is so much inflation and when will it end.
Several countries in Europe are seeing civil unrest.
Angry, frustrated, and helpless.
There's widespread anger and despair.
Now, it's 50% more.
Inflation is the increase in the cost of goods and services over a specified period, typically measured on an annual basis, but nowadays inflation is being measured monthly as prices are changing very rapidly. Usually, inflation is caused by several factors: when people have more income or spending opportunities, when major disruptions in supply chains occurs due to events like global crises, and when economic outcomes don't align with expectations. The causes of inflation today can be attributed to three main factors, which is increased household demand after COVID restriction ease off, supply chain disruptions resulting from the pandemic and the conflict in Ukraine, and a shortage of labor in market which happened due to massive COVID layoffs. At the onset of the pandemic, consumer spending decreased due to lockdowns, leading to increased savings. As restrictions eased, consumer spending rose again. However, many businesses struggled to meet this heightened demand as they had reduced production during the pandemic, faced shipping delays, and encountered labor and supply shortages resulting in inflation. Moreover, Russia-Ukraine war has added fuel to fire. The conflict of Russia and Ukraine, both major global agricultural suppliers, has disrupted the supply chains for essential crops like wheat, corn, and sunflower oil. This disruption has caused global food prices to surge by 17%, impacting consumers and food-related industries worldwide. Furthermore, Russia's significance in supplying critical commodities like palladium and titanium has repercussions for industries such as automobiles and farming, leading to potential shortages and rising costs. In the energy sector, Russia's prominent role as a contributor to the global oil and energy industry has triggered a significant surge in energy prices, affecting both businesses and consumers. Additionally, conflicts can induce heightened volatility in financial markets, leading to uncertainties for investors and fluctuations in stock markets. Additionally, low unemployment rate and wage gains has increased the cost of services for consumers. Tight labor markets have led to higher labor costs, affecting the overall cost of production for service industries. Looking ahead, there are various predictions regarding the trajectory of inflation. The Federal Reserve anticipates that inflation will reach peak in 2022 and subsequently decline in 2023, with a return to its 2% target not expected until 2025. Morgan Stanley, on the other hand, expects inflation to peak in the fourth quarter of 2022. Goldman Sachs provides a more detailed forecast, predicting a decline in inflation from 5% in 2023 to 3% year-over-year. The World Economic Forum foresees a gradual reduction in inflation rates, projecting a decline from 8.8% in 2022 to 6.5% in 2023 and further dropping to 4.1% in 2024. Some attributed the post-pandemic inflation surge to overseas supply chain issues rather than consistent consumer demand in the United States. Price gouging and greedflation theories arose, suggesting market concentration and monopolistic pricing power of large corporations contributed to inflation. However, some economists disagreed, emphasizing that competition usually keeps prices in check. Economists also pointed out that consumer demand, rather than corporate greed, was the primary driver of inflation. Companies adjusted prices according to consumer behavior, and corporate profits increased as prices rose. Temporary wage increases lagged behind price hikes, resulting in higher profits. Corporate profit margins reached record highs during the pandemic, with U.S. companies experiencing their highest profit margins since World War II. The willingness of consumers to accept price increases due to various factors, including government stimulus, investments, pay raises, and low-interest mortgage refinancing, contributed to inflation. Oil companies reported record profits in 2022, partly due to supply chain constraints and price inelasticity. Refinery profit margins remained high, even as refinery capacity constraints persisted. Some governments imposed windfall profit taxes on oil producers to address the situation. To give you hope, I want to tell you that, in the 1980s, the United States experienced high inflation, with rates reaching as high as 14.6% in 1980. This inflationary period was primarily driven by factors such as substantial government spending and two oil price shocks of 1973 and 1979. The central bank, the Federal Reserve, responded by raising interest rates to a historically high target range of 19 to 20%. While this strategy led to increased unemployment and a severe recession, it successfully brought down inflation to 1.9% by 1986. To protect against inflation, it's advisable to budget carefully, establish an emergency fund, make wise investments, monitor the interest rates on your debts closely as inflation will not end by the end of 2024.